What's going on, guys? Welcome back to the channel. My name is Anfernee, and I think it's about time we have a conversation about paychecks. You see, normally when you get paid, whether it's monthly, semi-monthly, or bi-weekly, that is usually one of the most exciting days of the month. Because once you receive that new paycheck, you seemingly erase the last 2 weeks or month's worth of purchases. You start off on a clean slate with more money in your account, and then you just go on with your everyday lives, making new purchases and diminishing that bank account back down. And as life goes on, that cycle continues. You get paid, you pay bills, you buy stuff, and then you get paid again. However, if you just take a step back, take a broader look at things, and see from a net worth perspective, by continuing on this cycle, which is known as the rat trap, you are not actually making any progress toward building wealth or making your financial situation any better. So that's why I want to sit down and talk in this video about the 5 steps you should take when you get paid in order to ensure that you are building wealth as efficiently and as effectively as possible. By the end of this video, my goal is to make payday boring for you. It shouldn't be something you're necessarily excited about because you have already put measures and plans in place that have a use for the money that you're going to be receiving. But without dragging the intro along any further, let's talk about the first thing that you need to do when you get paid, and that is something called paying yourself first. Now, normally when you get paid, the first thing that you think about doing is paying your bills. You want to pay your rent, you want to pay your mortgage, you want to pay your cell phone bill, light bill, utilities, all of these different things, and then whatever you have left over, that's money that you think you have to play with or to save or to do anything with. However, I want you to think about reversing this order. Once you get paid, I want your first thought to be, how much can you pay yourself? How much can you use of this paycheck to help build your financial situation? How much can you put towards your financial freedom? Now, this may sound like a backwards order, but this is all psychological. By you paying yourself first, you are telling yourself that your own personal financial health is more important than a bill collector's financial health. And this type of mindset will help you develop the mentality needed in order to generate more revenue if you need to pay back the debt collectors or the bill collectors. But when you think about actually going about paying yourself first, you may be wondering what exactly that entails. Well, firstly, the easiest and I think the most simple way to pay yourself first is actually through your employer-sponsored 401k program. Usually, if you have a job that has a sponsored 401k program, they'll take anywhere from 1 to 2% automatically from your paycheck, even though they may offer a company match of 5%. What a company match on a 401k means is that they'll match any amount dollar for dollar up to a certain percentage amount of your paycheck once you contribute that to your 401k balance. And because these contributions are pre-tax, you're actually going to be saving money on taxes in the end while also getting a free extra paycheck from your employer. So if you got a base salary of $1,000 and you contribute 5% to your 401k and your company has a 5% match, that means for every $50 that you contribute out of your paycheck, your company will max a maximum of $50 as well, giving you a total of $100 contributed to your 401k. And I say that this is one of the most simple ways to pay yourself first is because this is done automatically. You don't have to do anything once you set this up. The 401k program that you choose to enroll in will automatically invest the money for you and will automatically take the money out of your paycheck, so you don't have to give it a second thought once you sign up. Now, there are some downsides to this, and one of the biggest being that you can't access any of this money until you're almost 55 years old. So if you needed this money for an emergency, you wouldn't necessarily have access to it unless you had some pretty special circumstances as according to the tax code. But there is another investment account that can double as an emergency fund, which will allow you to have access to your money pretty much at all times while you still being invested in the stock market. And this second investment account that you can use to pay yourself first is actually called a Roth IRA. Now, with a 401k, you're contributing before tax dollars, meaning that taxes are not taken out of the initial dollar amount, so you will have to pay taxes on that amount someday later in the future. But with a Roth IRA, you're going to be contributing after tax dollars, meaning that the taxes have already been taken out of this sum of money, and now you're able to invest in a special account that allows your money to grow tax-free without ever having to worry about capital gains. The only caveat with this account is that you're only allowed to contribute $6,000 per year to this account, which roughly translates to about $500 a month. But the reason why I say a Roth IRA can double as an emergency fund is that at any time you are allowed to withdraw your contributions to your Roth IRA for any expense you may need it for. The only issue you may run into eventually is that if you start trying to withdraw gains, and if you withdraw gains before the age of 55 and a half, you will then have to pay a 10% tax penalty while also paying income tax on that dollar amount. So those are 2 great retirement accounts. And the last investment account you should put your money into once you get paid is called a regular individual brokerage account. Now, this is not a retirement account, so you don't get any favorable tax treatments, but it is a regular investment account that you will see on things like Charles Schwab, Fidelity, Robinhood, or Public even. And those accounts just allow you to put after tax dollars into that account, but you then have to pay capital gains on any amount that you make in the future. And mentioning Public, if you do want to sign up to Public using the link in the description below, you will get a free fractional share of a stock of your choosing, valued anywhere from $3 to about $100. However, the reason why I say it is a little bit backwards by paying yourself first is because you need to have a pretty good idea of how much money you actually have to pay yourself, so you don't end up investing too much and not having enough money left over for your bills. But that's when you can move on to the second step that you need to take once you get paid, and that step is actually by creating a monthly budget. Now, I know budgets are boring, but they are absolutely vital in terms of monitoring your financial health and knowing what you have to spend and what you don't have to spend. When I was a little bit younger, I never used a budget. I would simply glance at the amount of money I had in my bank account and then make a rough estimation of how much I had to spend after accounting for bills. But when you actually make a budget, whether you use an app, whether you write it on pen and paper, or whether you use a spreadsheet, you will have so much more clarity on your financial health. You'll know if you're overpaying for subscriptions that you don't need anymore. You will know if your landlord has been increasing your rent by $100 a year and you just haven't noticed it. All of these things and improvements to your financial health can come just by creating a budget. Personally, I use Google Sheets for my budget because I'm able to edit that document from anywhere, whether I'm on my iPad, on my desktop, or on my phone. I'm always able to access my budget if I have internet connection, and that just allows me to know exactly what I have to spend. So if you're not as Excel savvy but you still want a budget, one of the tools I would definitely recommend is the Mint app, and that app gives you a very clean software in order to track your expenses. Dave Ramsey also has an online software as well where you can sign up and use his budget system, and I've seen a lot of people on YouTube finding a lot of value in that software. However, moving on to the third step that you should take once you get paid, and that step is actually by establishing an emergency fund. And now, having a Roth IRA is a great emergency fund, don't get me wrong, but I still think that there is some value in having some cash in your savings account that you can access in a few seconds. If you had your money invested in a Roth IRA, you'll then have to go and sell the investments that you made and wait 2 to 3 days for that money to settle, and then wait another day for the money to get to your account. So you don't immediately have access to it, and it's not as liquid as most people will feel comfortable with. So after paying yourself and after establishing a budget, you then see how much money you have left over in order to start building up a sizable emergency fund. As I said in a lot of my videos, $1,000 is a good number to shoot for, while 2 to 3 months worth of your expenses is even better. And if you want to get really conservative, and if you work a commission-based job, I believe that about 6 to 12 months worth of your expenses should be saved in cash, just in case the market tumbles or just in case you lose your job. You never know what can happen. But when I got started building my emergency fund in college, I legit got started by saving $100 a month. I saved $100 a month for 10 months, so I got up to $1,000. And then once I graduated college, I then started putting about $1,500 towards the emergency fund until I got about 3 months worth of my expenses saved. So find out what you're comfortable with and then put some money in savings so that you do have some cushion just in case you take a financial turn for the worse. Over 60% of Americans can't cover an unexpected $500 expense if it happened today. So give yourself that financial security and cushion to be able to withstand some financial hardships without it absolutely breaking the bank or without you having to go into debt in order to cover these expenses. And then after this, you can move on to the fourth step that you should take once you get paid, and that step is actually to evaluate your tax status. Now, usually most people tend to pick the most simple things when it comes to their tax deductions. They tend to pick they're either single or head of household. They tend to pick that they don't have any dependents. But if you do have dependents, or if your tax status may be unique from the normal, you may be deducting too much from your paycheck and basically giving the government an interest-free loan until they give it back to you come tax time. Now, if you do overpay for taxes, the government will give you your money back. But if the government holds it, as I said, they don't pay you any interest for the amount that you overpaid. So if you evaluate your tax status by talking to a local accountant or a professional and know exactly what you have to pay, you will then be able to lower your tax deductions from your paycheck, have more of your money in your pocket in the current day so that you're able to invest more, save more, or overall give yourself a better lifestyle while not giving Uncle Sam an interest-free loan. This works especially well if you're married. This works especially well if you have kids, because most of the time you get big tax breaks from these big activities. And by knowing exactly what you have to pay, you won't be subject to any big tax surprises come the beginning of the following year. You could, and I would absolutely recommend you go talk to an accountant for this. However, I do think that there is a lot of valuable content on YouTube talking about this exact thing, and you probably could find someone with your exact tax situation talking about what exactly you should be paying the taxes. Now, this does get a little bit more confusing if you're self-employed or if you make some income other than a W-2 income, but for most tax situations, there's some pretty good content out there on YouTube that you can learn from. And then the fifth and most exciting thing you get to do once you get paid is redistribute your extra cash flow. Sometimes paychecks fluctuate, and if they do, you can then use some of your extra cash flow to enjoy your life a little bit more. What I'm saying is that you should absolutely budget for entertainment in the monthly budget section, but if you have a little bit of extra money after paying yourself, after saving, you can then use this extra money to have more fun because you know that you've already done your job in helping establishing your financial security. I'm not one to say that you should save or invest every single extra dollar you have. No, I do believe that there is value in enjoying your life in the present day because you never know when it can be taken away from you. But you should always make sure you have a plan of securing your future before wasting your today money. I believe that you should be making progress each paycheck towards building wealth, towards being a millionaire if that's your goal. And by doing small contributions over a long-term period of time, your wealth will begin to compound exponentially. $100 can turn into $1,000, $1,000 into $10,000, $10,000 into $100,000, and then $100,000 into $1 million because you chose to take the stance to start today, and you chose to take the stance to invest your money, and you chose to take the stance you will be financially free by taking control of your finances. And with all that being said, I really hope you enjoyed this video. video, don't forget to check the links in the description to sign up to Public, where you will get a free fraction share of a stock if you sign up using the link in the description below. Also, if you like this video, don't forget to smash that like button for your boy, as it really does help the channel out. And I hope you have a very great rest of your day, and I'll see you in the next one, guys.